Hi, I'm Todd Rosenbluth, Head of Research at Vetify, and welcome to another episode of ETF 360. Today I'm joined by Scott Thomson of DoubleLine, and we're going to talk about their new ETFs. Scott, thanks for joining me.
Hey, Todd. Thanks for having me.
It's my pleasure. So welcome to the ETF industry. Congratulations. Let's talk about the two products at a high level and what made you guys enter the market.
Certainly. So DoubleLine has an existing strategic partnership with State Street, and we've launched 3 ETFs with them since 2015. But really, we launched our ETF business in March of this year, launched 2 new ETFs, one fixed income ETF, DBND, and one US Equities ETF, CAPE, CAPE, and really just thinking about delivering our active platform to investors in a standalone format.
So let's dive a little bit deeper. DBND is a fixed income product. You guys have a long history of offering actively managed strategies, either in the mutual fund wrapper or other wrappers. What makes the active approach different than index-based alternatives?
Certainly. So DBND, the DoubleLine Opportunistic Bond ETF, is really an expression of our core fixed income solution for investors. It is actively managed. It is benchmarked versus the US aggregate or the Bloomberg US aggregate index. And really, we're seeking to outperform over cycle, delivering alpha from not only the fund's global multi-sector opportunity set, but our broad and flexible strategy toolkit, and also really thinking about the implementation of DoubleLine's fixed income asset allocation process or FIA process. And that's marrying the top down with the bottom up across the portfolio in terms of duration, credit, curve, sector, currency. Really, we're blending all those together to find the most attractive relative value opportunities and the best reward to risk sectors and investments for investors. And that's really unlike a passive or index oriented strategy where, for example, in traditional fixed income mandates, where you're benchmarked versus the Bloomberg US aggregate, it's a passive strategy. And that, by definition, is allocating capital to the most indebted issuers. And so that in a lot of ways, it's inefficient. You are allocating capital as opposed to the most worthy or most attractive investments. It's being allocated to the most indebted issuers. And that's something we think investors should consider, in addition to the benefits of an active approach, particularly in this environment.
So that's DBND, that's the fixed income product. Let's talk about CAPE, your equity ETF that launched earlier this year, how it's different than the broader other suite of products that you have, and what the reception has been.
Certainly. And so CAPE, the DoubleLine Shiller US Equities ETF, is really a natural extension of our existing partnership with Barclays and Professor Robert Shiller. It's a pure expression of the Shiller Barclays US Sector Total Return Index in that we're seeking to outperform the S&P 500. And really, it's a complement to our existing product suite where we have mutual funds and in offshore space, UCITS funds that track a similar index, but are employing so or doing so via total return swaps and fixed income collateral. The CAPE ETF really seeks to employ this through pure expression of investing in US equities ETFs, US equities. And today, it's been a positive reception from investors. Today, the ETF has raised nearly $80 million. And since inception in March, we've generated over 200 basis points of alpha versus S&P 500.
Well, that's great. Exciting suite of products, 2 of them. I'm sure that there's probably more to come from DoubleLine, but exciting to get to hear about that, Scott. And thank you, everybody, for tuning in to the next episode of ETF 360. We'll see you next time. Have a great day.
Thanks for having me, Tom. Take care.